For TraderInsight.com, I'm Adrian Manns. It's Thursday, January 6, 2022. Let's take a look at what happened in our opening gap strategy session this morning. Those of you who join us every day are familiar with this web page. This is your scanner. And the first thing I'd like to point out is that if you don't see the highlights over in the right column there on your version of the scanner in the mornings, what you need to do is install a refresh in your browser. So whatever browser it is that you're using, just go ahead and look up an auto refresh for it. Those are usually plugins that can just be added to the browser, and have your browser update this page and only this page about every 5 to 10 seconds first thing in the morning. So what's going to happen is it'll go and give you those highlights as I post them, and that'll make it easier for you to know what I'm focusing on. Alternatively, of course, you can just look at the screen share that Julie does. That is going to display this just this way every single day in the room. When it was all said and done this morning, Akamai never triggered, so AKAM, that's number one. That was on my interest list. I liked the way that one was setting up. It was a classic 1, 2, 3 drop after the open. We kept getting nice lower highs. Looked like it was going to give us an entry opportunity at the high of the deepest bar, and then 7 a.m. Pacific time rolled around and we just never had a trigger. As for the rest of these, I got a text message from my friend Eric after the session was over, asking if I could just clarify what the thought process is and how it is exactly that I decide which ones of these I'm going to focus on versus which ones I'm going to scrub. So you can see all of these remained yellow this morning. If they would have turned white, it would mean that I was no longer interested. That does happen sometimes. But let's just have a quick look at these columns. What happened today was ANTM was just trading on much too wide of a spread. It's a $440 stock. There was no way to get into that one with an acceptable amount of slippage, and trying to get in at the bid and out at the ask was a no-go. So we knew that before we even got into the second bar of trading, so that one was kind of scrubbed. Dollar General, DG, same thing. The pattern on that one actually didn't set up very nicely, and the spreads were just too wide, as was the case with HUM as well. Now here's the chart of Western Union, and you can see that this looked like a really decent flip-top setup with a 1794 entry and then a target at pivot line. But that pivot line, that support to pivot, the black line here on the chart, was really only at $18.15. So what that meant was if we were going to place a target just shy of that pivot line, then probably the maximum we were going to be getting from this trade was 15 cents or 16 cents. And that just really didn't make sense in terms of trying to set up the position. I would have had to scramble to get the share size up. This one did travel way down into the range of the first bar before it formed the flip top. So the third bar would have been the one that validated the flip top setup, and our stop would really have had to have been all the way down here initially. And you can see that while that might be acceptable, it had already tested way back down into that range. I prefer that these open and close tight in the second bar to the top of the range of the first bar, so that's why this one never got highlighted and was sidelined almost from the beginning. The same thing held true on the short side with Lumen Technologies, LUMN. You can see here that the trapdoor setup, which is really one of my favorites because the short side of the market definitely moves quicker than the long side, gave us an entry around $13.07. Now that was 1 penny above R1, and that doesn't worry me so much as when you get a big wide range bar like this right out of the gate. Usually indicates that there's probably a measured move in the works. But look here, $12.93 was the central pivot. And if we violate R1 and make a move to the downside, the most likely place that we're going to wind up is at $12.93, the central pivot. And it's unlikely that we're going to see an excursion below that. So once again, this one was a matter of, do I really want to put the order together in order to capitalize on about a 10 or a 12 cent move? Now compare what you see in number 9 and number 11 with what we just talked about. LW and BBBY made a 2 standard deviation volatility gap this morning on earnings. So here you have an asterisk and here you have an asterisk, and that indicates that these stocks are trading on earnings this morning. There was an earnings announcement and both gapped lower. History and statistical analysis tells us that gaps on earnings tend to be overblown. Whether you're moving to the long side or the short side, it's seldom the case that where the stock is gapped to is really the value line based on the earnings announcements. Most of you know by now, I favor the short side anyway, and when the opportunity on the short side is obvious, as it is here, that's where I really like to focus my attention. Now we've got a $15 stock, and we've got a $70 stock. Given that they're both earnings-driven gaps, they've got my attention, but as I set up these trades, I'm looking at handling them very differently. Looking at Bed Bath & Beyond, as soon as that second bar formed, I knew we were looking at a possible 1, 2, 3 kind of a setup. Our initial target would be down here at $14.91, and that's because when the stock got down there in the first bar of trading, you could see there was a pretty strong rebound back up into the trading range. Now with a $15.31 entry and a $14.91 target, this trade already made sense. It's a 40-cent target. We can do it on a lot of shares. It's a $15 stock. And when you're doing sort of a bigger share trade and you're looking for a move that gets you down through a pivot line like this, $15.19 definitely looks like it has the possibility to expand down to this $14.28 pivot line. If you joined us in the room this morning, then you know that I chose to use a peak-to-trough Fibonacci study to figure out where the likely expansion was actually going to wind up before it bounced, and that looked just like this. So these are the levels that I gave you in the room this morning, down to $14.35. So that was the choice that I made. If you review your notes from the session, you'll see Adrian said $14.35 was target number 2, and in fact that is where the stock inflected. It did make it down to $14.28 eventually, but more likely than not, I would have had a stop up here at $14.91, the original target, and I would have missed out on this move to the downside. But this fib expansion is something that really winds up being useful to look at, as a lot of traders are watching for it, and it makes for a very nice way to establish a target for a second leg of the trade. So the way you would structure this bracket order is you would have a $15.31 sell stop. That's the level that would get you short. You would have a $15.64 stop loss for the entire thing. You would have a first leg that exited at $14.91 and a second leg that would get you out at $14.35. So if you're looking at how to structure this order, here's how you would enter the bracket. Let's just say for the sake of argument, you're trading 5,000 shares of Bed Bath & Beyond. This could be any number of shares. It could be 1,000, could be 2,000, could be 500, it could be 200. It's whatever it is that you're trading on the day. If you're using Realtic, you want to make sure that you set up both of these expirations, the entry order and the exit order, today. It's very important that there's not an order type mismatch here and that one of these is set to good till cancel. So just leave it set at day on both of these, or change it to day if you have a different default. And then in the case of Lightspeed, you're going to want to make sure that this is set to EQLS, as a lot of the other order routes are going to have trouble handling these legs. In this case, we've got a stop limit order with a stop price of $15.31. That's going to establish the short sale right here at this green line. That's our go line. $15.26 is the worst price we're willing to accept. That's our limit price. So sell short, Bed Bath & Beyond, $15.31 stop, $15.26 limit, expired day. Then on our exit order, we want to vacate Bed Bath & Beyond in its entirety, 100% of the order, at $15.62, which was our stop loss. So if we get stopped out of this trade, we want to exit all the shares that we have. But when we exit for a profit, we want to take half of our profit at the first profit line, which is $14.91, and then we want to look for a profit extension down to that expansion of the Fibonacci sequence at $14.35. So you can see that gives us a pretty substantial differential in terms of the profitability of leg 1 versus leg 2. And as soon as this starts moving in our favor, the thing you would want to do is reach up and pull down on that line and get that bracket order set up so that Your stop is more like $15.10, somewhere in this range here above a significant event. So when this bar opens, trades higher, and then starts moving lower, the way that I would handle this is to pull the stop down above the high of this bar. So you're moving the stop loss not only to risk-free, but you're moving it to profit-protecting. And again, in Realtic, the way that we do this is just pulling the lines on the chart. If you don't have live orders displayed on your chart, right-click inside the chart, click on Display Attributes, and then say Show Orders. And this will show any live order that you have. Make sure that this is checked, and if it is, you'll be able to interact with the order on the chart. You won't have to go fumble around on a level 2 screen to make the changes. So that's the logic on a lower dollar stock like BBBY. And that's why I made the statements I did this morning in our strategy session as to how we were going to handle the trade if it went live. It did go live, and it played out beautifully. The next one to trigger was our other earnings play, LW. And as you can see, this was a $69 stock. The bad news on this one was the bid-ask spread was a little bit wider than we typically like. We had a 69.61 bid and a 70.03 ask. The good news is those numbers reflect what happened on the open, and we had a little bit of time for this one to tighten up, to come in, and give us a good opportunity to enter with about a 4-cent spread at the time of the trigger. Here's the chart of Lamb Weston, exactly the way it was worked up in the room this morning. You can see we had a 70.66 low on the fourth bar of trading, and that was our trigger then. So we have this 1, 2, 3 setup going up into the trading range, and then the violation of 70.66 was our entry price, and then 69.97. That had a little bit of confusion for some of you as to why that was the target price. In my head, it was the open of the second bar of trading. It was the place that things sort of gravitated to in terms of volume by price. And I don't know that this low of bar 1 really represented a ton of trading activity when it was happening. I do know that when bar 1 closed, the first place it went, $69.97. That had confluence with this volume by price data over here. And really, if we got from 70.66 down to 69.97, what I was expecting was a repeat of what happened in bar 3. So this is why it's important to pay attention to what's happening right in front of you as these things set up. You see when bar number 3 got down and tested this level, that the inflection pushed it all the way back up into the trading range. That's what I was expecting to see if things failed at 69.97, and that's the reason that I then used that as a target. Could I have gone a little bit lower? Of course. Bar number 3, tested down a little bit lower in the range, but I just felt very comfortable with that 9.97 level in terms of a target. And in terms of a stop out, 71.05 to me looked like that was a very likely place that if we got up above, it was going to take off and move even higher. So 71.05 represents right around the close of this third bar of trading. It's where the stock managed to gap higher into bar number 4, the trigger bar. That said to me, if it does get there, it's pretty likely that we're going to get another pop to the upside, and I don't want to be a part of that. Could this one have been restructured with multiple trading legs and maybe a fib expansion or a move down to the low of the open being the expanded target? Of course, it could have. It just didn't set up in a way that to me said that was likely to happen. It did wind up happening, but we don't have a crystal ball. We didn't know that it was going to happen. And a lot of this trading here said to me, this has enough swing in every single bar that if I try to break it into multiple legs, I'm probably going to wind up stopping out for my profit stop or a break-even stop. And also the fact that it's a $70 stock says you're not going to be that comfortable putting on that many shares of this. The risk to reward in terms of the overall account is going to be much, much higher than it was on something like Bed Bath & Beyond. So there you have it. That was the logic of those opening gap trades that we took this morning. I hope that this helps you guys understand a little bit more of what it is that I'm thinking when I post these things. For the sake of clarity and transparency, I'm just trying to work you through the thought process so that when we talk about these things during our strategy session, you'll have the courage of your convictions and be able to trade them for what they are rather than for what we maybe want them to be. If you have any questions, shoot me an email, adrian@traderinsight.com. Hope you had a great trading day today and an even better one on deck for tomorrow. It's the best trader education anywhere, only from traderinsight.com.